Welcome back after the break in our Expert Speak segment. Today I am joined by Vighnesh Shahane, former CEO and Managing Director of Aegis Federal Life Insurance. Thank you so much, Mr. Sahane, for joining our show, taking your time out. First and foremost question I want to ask you, we have seen in the data also that number of policies are not increasing, insurance penetration is not going up. So according to you, according to industry veteran and served company like Aegis Federal, what are the main reasons that number of policies are decreasing for top insurers also?
Anurag, I think there are two reasons. One reason is over the last 6 or 7 years, average ticket size of every policy is increased by almost 70%. So that compensates the loss of numbers because as the industry, insurance is growing. So the target of the intermediaries is met after meeting ticket size. Increasing ticket size is 70%. Hence, you see a drop in number of policies. And the second reason, which I've been saying for a long time, is that the way we calculate penetration should be changed. We calculate penetration as a percentage of premium over GDP. Now it should be number of lives covered. If it's number of lives covered and the penetration, the definition of penetration in the country changes, then you'll see a greater focus from the insurance companies and the intermediaries on number of policies. But till that happens and ticket size keeps increasing, you'll see policies keeping on decreasing because channels meet their targets on achieving ticket size.
Okay. So government is also focusing on couple of reforms, and going ahead we'll see Insurance Act amendment which will have the open architecture also. So what are your views of open architecture for agents and brokers?
My views for agents and brokers are that agents are tied to an insurance company. I think insurance company invests a lot of money, time and effort in recruiting the agent, training the agent, and that's how it should be. And similarly for brokers, brokers represent the insurance client and not the company, so it makes no difference. But agents should be tied to an insurance company because insurance companies do invest a lot of time, effort, and money in recruiting and training agents. My view on bank assurance, and which I've been saying for the last 15 years, is that in bank assurance, I don't think open architecture is working. I've been saying that for 15 years. In bank assurance, the trick is to go deep rather than go wide. Because every company has the same products, same processes. So there's no point tying with 4 or 5 companies and confusing everybody because insurance is not center of plate for the bank. So you don't need to tap with 5 insurance companies. You tap with one insurance company and go deep. That is the trick of bank assurance. Don't go wide, go deep. You'll see that if that happens, change will happen. As of now, bank assurance does not seem to be working with any bank.
And according to you, how serious is that mis-selling concern related to the bank assurance?
I think mis-selling happens, Anurag, across all channels. It so happens that bank assurance amongst private players contribute to 70 to 80% of business. Hence, 70 to 80% of the mis-selling complaints also come from bank assurance. But mis-selling happens in agency, corporations, brokers, online, everywhere. Now, in bank assurance, since I have been closely involved in bank assurance, I can tell you that when the customer walks into the bank, he does not want to take an insurance policy. He either wants to open a savings account or a fixed deposit or take a loan, or he's got some service issue. But no one comes into the bank to buy an insurance policy. Now, the average time, we calculated this, we studied this, in a bank assurance sale is about 5 to 8 minutes because that's all the customer has. According to me, the average time for an insurance sale should be nothing less than 35 minutes. So therein lies the issue. A 35-minute sale, you're trying to compress in 5 to 7 minutes, and hence this misrepresentation happens across products and across customer segments.
Okay. And do you also think that higher commissions are also associated with mis-selling because first year commission at times go more than 25-30% also?
Yeah, I've always been saying this. I've been a proponent of this, Anurag, that commissions I feel should be staggered across 3 or 4 years. You shouldn't pay commissions upfront in the first year because that also could lead to some misrepresentation, hunger to reach a target faster to earn higher commission. So if you stagger commissions over 2 3 years, there is an incentive for you to renew the policy.
Okay. Vignesh, I just want to get your opinion because nowadays there's a big argument going on there, and there's a lot of experts are also saying don't mix insurance and investment, just buy term insurance, nothing else in life insurance space, and go for a mutual fund and term insurance, and don't go for ULIP. So what is your view?
My view is that if you are a disciplined investor, then you must not segregate. Then you must segregate your insurance investment needs. Then you can buy a term policy and invest the rest in a SIP or a mutual fund or whatever you want. But if you're not a disciplined investor, then insurance forces you to pay your premium every year, and part of it goes towards protection and part of it goes towards savings. So just depends on you. But personally, I feel that I don't mix my insurance investment needs. I buy a online term policies because they're very cheap at this point of time in India, and I invest the rest in mutual funds because India's story has been very good in mutual funds and equity markets for the last 5 or 10 years.
Okay, so you also
And
believe that returns are higher in a mutual
So,
fund instead of going for ULIP plans and all.
sorry, can you repeat your question?
No, I'm saying that you are also firm believer that go for a term insurance and mutual fund because there you
It's
will get a
probably
more returns instead of going for a ULIP plan.
it's probably a political thing, a politically incorrect thing for me to say because I've been part of the insurance industry, but that's what I firmly believe, that you should invest in online term and put the rest in a SIP or mutual fund if you're a disciplined investor. Plus, a ULIP does not give you as much protection as a regular term, term policy would give you.
Okay.
If you take a term, for instance, if you take a ULIP policy of 1 lakh, the protection you get would be only 5 lakhs.
Okay, so pros and cons are there for both the products.
No, I would say if you're a disciplined, enlightened investor, don't mix the two. But if you're not, then I think ULIPs is a good time to be in ULIPs. The charges are at all-time low, and ULIP is not a bad product.
ULIP is not a bad product. Vignesh, I want to get your view on this Section 45 in term insurance. It protects policyholders during the claim settlement. As an industry leader, what's your view on Section 45?
See, as an industry leader, I have two views. One is it's very good for the customer because it says that after 3 years, your insurance policy cannot be repudiated by your insurance company. But for the insurance company, it's not so good news because if there's been some misrepresentation or fraud, in 3 years it gets nullified and neutralized, and you have to make the claim.
Okay.
So while it protects customers, it's very good for customers. It's not very good for insurance companies. If they detect a fraud at the time of underwriting, if it happens after 3 years.
So do you think that companies are suffering because of Section 45 and there may be a large number of fraudulent claims which give the complete protection to policyholders who are indulged in frauds?
Absolutely. When I was the CEO of the life insurance company, I see frauds and misrepresentations increase year on year. So there is definitely an increase in the number of frauds, forgeries, and misrepresentation. 100%.
Okay. So, Vignesh, we are moving on the last leg of the show, our rapid fire segment. I have few questions for you and you have to answer it very fast. My first question to you, Vignesh, what's the biggest misconception Indians still have about the life insurance?
I answered that it is a misconception that I'm going to live forever. I'm never going to die. I don't need life insurance.
Second question, Vignesh, one product category you believe is currently undervalued by customers?
Term.
Okay. Third question, will guaranteed return product continue to dominate in FY26? Yes or no?
There is a market segment which always needs guaranteed returns, and hence guaranteed returns will always be there.
One change can instantly improve claim settlement experience.
The customer fills up the form on his own and doesn't rely on the agent to fill up the form.
Okay. Is India ready for fully digital life insurance with zero paperwork?
Not as long as frauds and misrepresentation and fraudulence exist. So I think insurance is an eyeball-to-eyeball sale. And as much as you talk about digitalization, I think the sale should be made eyeball-to-eyeball.
Okay.
Face to face.
Next question, Vignesh. What is the biggest risk to life insurance today? Longevity, regulation, or competition?
I think a combination of all three. But I would say that competition is the biggest short-term challenge.
One thing, and Vignesh, next question. One thing customer must check in their policy, but they never do.
No, I think the customer should fill up the form himself. He should not apply, because 99.99% of the customers I know rely on the agent or the channel to fill up the insurance form. If the customer himself fills up the form, all kind of miscegenation will end.
Okay. Second last question. Is the industry over-dependent on bank assurance today?
I think bank assurance will be your dominant low-cost channel for the next 5 or 10 years.
Okay, my last question, Vignesh. Which segment will drive growth? Youth, mass affluent, or senior citizen?
Youth.
Okay, thank you so much, Vignesh, for joining our Insurance Mantra show. But before we wrap up the show, we'll leave you with our insurance basic. Did you know that term insurance without income proof? Did you know that you can still buy term insurance even you don't have salary slips or ITR? Income proof is needed because it helps insurers decide the right coverage for your family. But if you have no income proof, no problem. Freelancers, gig workers, small business owners and homemakers often lack document, and insurers now offer flexible options. So one option is that Saral Jeevan Bima IRDA standard plan, which offer of coverage from 5 lakh to 25 lakh based on age, job, residency, not salary slip. Other proofs that is also accepted by insurance companies is bank statement, credit card repayment history, and GST filings, invoice of rental incomes, vehicle RC, property paper. So these are the financial surrogates showing stability. Be truthful. Wrong income details can lead to claim rejection. So bottom line is, even without income proof, term insurance is possible. Start with a practical cover and increase it, your income grows. So stay informed, stay protected. That's our insurance mantra.